The good, the bad, the ugly.
Thank you, Danny. I know you are old enough to remember The Good, the Bad, and the Ugly, the movie, the Clint Eastwood movie back in, I think, the 1960s. And what a great actor Lee Van Cleef was. You remember that, his participation in that movie. But that was a long time ago. But I will tell you, there's a lot going on right now. And let's talk about some of the information that came out this week. And one of the things that we were looking forward to, because we're kind of that way, is this PCE indicator. People are going, what are you talking about? But it's an inflation indicator that the Fed likes to use.
It is, yeah. The personal consumption expenditures indicator. It's kind of a mouthful, but the Fed, ever since 2012, they have been targeting this particular measure of inflation. A lot of people look at the consumer price index, which is another measure of inflation. That comes out earlier in the month, but the Fed looks at PCE mainly because it's fairly broad-based, and it oftentimes runs a little bit lower than the consumer price index because of some of the design.
Right?
Yeah, it makes it a little easier for them to try to hit their target. So it's kind of nice when they can pick their own target that way. And it came in, thankfully, mostly in line with expectations, which were already kind of elevated.
Right.
Earlier.
So that was a sign of relief for them.
It really was. But one of the problems is that what we've seen is that in January, inflation, as measured by the PCE and CPI, was pretty hot. And then February, it was also hot, but not quite as bad. And then March, still too high. But it looks like maybe if you kind of play that game of connect the dots, the January, February, and March ones, it might be trending a little bit lower. But there still is no reason for the Fed to try to start cutting rates anytime soon.
Yeah, that's right. And the Treasury yields reacted to that. And of course, one of the things we look at is the economy, and is it growing? Is it not growing? Is it slowing down? Because of course, it's going to be a major part of the election season.
Yes.
Is how is the economy doing? And that GDP report came in, and it was a bit tepid.
Yeah, tepid is a great way to describe it. 1.6% annualized. So the way that they do it is whatever the quarterly change is, they just kind of multiply it by 4, saying, what if that continued for the entire year? 1.6% is almost like treading water, to be honest with you. And the details of it were pretty illuminating. What we saw is a continuation of the trend of consumers driving growth, but that consumer spending is beginning to slow a little bit. There's actually a decline in the volume of purchases of goods, but an increase in services. But even that part has been slowing a little bit lately.
Yeah, that's for sure. And of course, another part of this election conversation is going to be who leads the Fed. And of course, Chairman Powell has taken a lot of punches over the years of the term transitory, which was not transitory. And then you'll remember several years ago, he was actually asking for inflation.
I know. That's so, I mean, you imagine that he looks at what he has said in the past, and I've done that too, right? You've said something, you're like, man, I really wish I didn't say that.
Everyone's done that.
Yeah, but he was being too specific with the word transitory, saying, let's say 6 months. Well, it's been a lot more than 6 months. It's going on, I think, now like 2 years. And then as far as he said that when we were coming out of COVID, that, hey, we would welcome some inflation because we know how to deal with that problem.
Right.
Well, do they really?
Got away, yeah.
Yeah.
So let's switch topics, because that is certainly something we're going to continue to converse about. But of course, we are in earnings seasons. A ton of reports came out this week. In fact, I think about 150, is that right?
That's correct.
150 of the S&P 500 reports came out this week, and it was a mixed bag, but in general, it was pretty good.
Yeah, I would say that really, if it's a scorecard, on balance, it was good. We're about halfway through. About 46% of the S&P 500 companies have reported so far, and within any given sector, so let's say technology or communication services or energy, it's been kind of winners and losers, where if you just take as an example, let's compare Meta, the parent to Facebook, to Alphabet and Microsoft. Meta, they were investing a lot of money in artificial intelligence and begging investors to be patient with them for it to actually pay off.
Right.
Contrast that to Alphabet and Microsoft. They've made the investment, and it is already paying off for them.
And so higher sales, right?
Yep.
Higher revenues, no matter what your industry is. You like to see the revenue number go up. Some had earnings go up, right?
Yep.
That's the bottom line, and some didn't. But those that had both revenue and earnings beat certainly were rewarded. That is the dynamic duo that we like to talk about. But let's just switch real quick to these consumer stocks that we've been looking at.
Yeah, on the consumer side, one of the messages is that the consumer is resilient but price sensitive. I think Pepsi, when they announced their earnings, they were talking about the resilience of the consumer. Kimberly-Clark, they reported higher volumes, not just prices. And that's one of the things on our investment committee that we really pay attention to. We want to understand the fundamentals, the valuations, and then the market opportunities for the companies that we invest in. And one of the fundamentals is not just about looking at revenue or earnings, but it's about, is there actually volume behind it? It's not just about price, it's also the quantities. And for a number of these companies, they're saying, yes, actually the volumes are improving, but that's not across the board. Contrast that with, say, Tesla, electric vehicles, or even with Ford and General Motors. Well, the earnings were good for Ford and General Motors. The volumes that they're looking at for electrical vehicles is actually declining. And so now they have to do some price concessions. So if you don't have the volume growth, it's really hard to sustain any price increases as well.
So let me try to wrap this all up. Give me your best Clint Eastwood, right? The good, of course, was that we had good earnings report and some de-escalation geopolitically. Did I get that right?
That's right.
The bad was we saw some economic numbers, and we even talk about this, but German PMI and some other places starting to slow down, and the outright ugly.
Yes, the outright ugly. I'd say the treasury auctions have been pretty ugly as far as the amount of debt that's out there, the way that it needs to be financed and absorbed by households and businesses. Some of those auctions, that's why we've seen so much volatility in the yield and bond market.